Welcome to PurplePond YouTube channel. We are hearing lot of news about NPS, National Pension Scheme. We have more doubts than the facts about it. Today, we have Mr. Saravanan, the director and the promoter of PurplePond, who is a certified financial planner. He is a certified estate and trust planner, and he is also a certified retirement advisor. Who better than Mr. Saravanan will be able to help us out on the doubts on NPS? Welcome, Mr. Saravanan.
Thank you for your kind words, Samya.
Sir, can you explain what is NPS?
We come across acronym NPS very frequently nowadays. Let's talk about what NPS is all about. National Pension Scheme, popularly known as NPS, is a contributory pension scheme introduced for the government employees who join services from 1st January 2004. In this scheme, the employee and the employer contributes a fixed sum of money, and this money is getting managed by a professional fund manager. The corpus at the end of the period will determine what the pension the retiree would get. In explaining this, you will be able to appreciate this contributory pension system when you know what the pension system was prior to 2004. The pension system prior to 2004 was called as the Defined Benefit Pension Plan. In the Defined Benefit Pension Plan, the retiree would get 50% of his or her last drawn basic plus DA. This Defined Benefit Pension Plan was causing a huge financial stress to the governments across the world, including Indian government, were seeking for an alternative to this defined benefit scheme. Reserve Bank of India, under the leadership of Mr. B.K. Bhattacharya, then the Finance Secretary of Karnataka, constituted a working committee which studied the defined benefit scheme, and they came out with an alternate for this defined benefit scheme, which then was called the New Pension Plan, and then renamed it as National Pension Scheme. This National Pension Scheme, first it was extended to the government employees, then it took the other avatars. Now NPS has got 4 avatars: NPS Government Model, NPS Corporate Model, NPS All Citizens Model, NPS Atal Pension Yojana. The Atal Pension Yojana and government model can be dealt later. Soumya can focus questions on the second and third model, and if viewers are interested in knowing about the government model and Atal Pension Yojana, you can directly call us and we'll be happy to answer all your questions on these models.
Very nicely explained, sir. Who are all eligible to become subscribers?
NPS can be subscribed by citizens of India. Both resident and non-resident Indian can subscribe to NPS. The age bracket is they have to be above 18 years and below 65 years. The person of Indian origin and the OCI card holders, overseas citizen of India, both of this status are not eligible to become the members of NPS.
Thank you, sir. How to become a subscriber?
NPS subscription can be done by an online model, or it can also be done through a paper submission. So NPS online, you will have to upload all your KYC documents and generate a PRAN number. PRAN number is Permanent Retirement Account Number, and if you are following the paper model, you will have to submit your filled in application to the POP. POP is point of presence, and they will be able to generate the PRAN number. In case you have any difficulty on getting it through online or through a paper model, you can always call us and we will be happy to help you get the PRAN number.
Sir, can you briefly explain how NPS works?
Yeah, NPS has a structure in which there are more than 5-6 constituents. NPS first acts as the trust, NPS trust. Whatever money is collected from the subscribers, NPS trust appoints the pension fund managers to manage this money, and NPS Trust appoints the custodian who will take care of the securities which are bought. NPS also appoints the trustee bank where the entire cash flow, the contribution and the refund of the money at the maturity, all these things are handled by the trustee bank. So these are the constituents. Then for servicing, we have POP. POP is point of presence, who will be the liaison between the pension fund managers and the subscriber. Once the maturity is there, the money has to be dealt with an annuity plan, or a pension plan has to be bought using the proceeds of this NPS. To handle that, PFRDA, Pension Regulatory and Development Authority, have appointed the ASPs, the Annuity Service Providers. This is the whole framework or ecosystem of NPS.
So that was an exhaustive system on NPS. There's so much to know about it. So can you explain to the viewers how NPS is the best tax planning tool?
Every one of us are too eager when it is tax planning. So we will be more than happy to take any path which will give us the tax planning. NPS has three different ways in which you can have the tax planning done, or they give you concessions under three different sections. NPS, you can, if you are part of the corporate model, the section 80 CCD1 gives you tax exemption for the amount of money which you contribute, which can be up to 10% of your basic and DA. This 10% of basic and DA will be treated within the 1.5 lakhs maximum limit for section 80C. Under the section 80 CCD2, the employer contribution up to 10% of basic and DA will be exempted from taxation. This is the best option available to structure your CTC, because there is no monetary ceiling on the employer contribution. Whatever is the employer contribution up to 10% of the basic will be completely exempted from tax. So there is the third section, which is section 80 CCD 1B. Under this section, all the citizens of India are eligible to invest 50,000 rupees per annum, and this 50,000 rupees is exempted from tax, and this exemption is over and above 1.5 lakhs which we enjoy under section 80C. So NPS becomes one of the instruments which can give you far higher tax exemptions beyond section 80C. Now let's look at an example with which you will be able to appreciate the power of NPS in tax planning. Let's look at Mr. Kamalesh, who is a private sector employee whose company is part of corporate model, earns 1 lakh rupee as his basic, and his PF contribution is the statutory contribution of 1,800 only. So he has a gap under section 80C. He contributes 50,000 rupees as a voluntary contribution under the all citizens model. Now let us look at what are the tax benefits or what are the tax exemptions he can claim. Let's look at section 80 CCD 1. He contributes 10% of his basic, that is 10,000 rupees per annum, which is 1.2 lakhs. Then under section 80 CCD 2, the employer contributes 10% of basic, which is again 1.2 lakhs per annum. Then he also contributes 50,000 rupees under the all citizens model, that is exempted under section 80 CCD 1B. So that is another 50,000 rupees. So 2.9 lakhs, now he will have a tax exemption. So 2.9 lakhs will be exempted annually from his total income. So this 2.9 lakhs, considering Mr. Kamalesh in 30% bracket, will translate to a tax saving of 87,000 rupees. So such a wonderful tool NPS is, and you will have to take it up with your employer to adapt this corporate model in your organization. And if corporate model is adapted in the organization, the employees will have a greater tax planning tool, and the CTC can be structured such that employer and employee contribution gets the tax break.
Thank you for explaining NPS as the best tax planning tool with an example. We have many questions on NPS, which we will see in the next session. There are Tier 1, Tier 2 account, LP, active choice. So we'll see these answers in our next session. Stay tuned. Please subscribe to our PurplePond YouTube channel.